Whether it's Bitcoin, finance, or life-changing strategies, we bring you deep analysis, expert opinions, and powerful ideas that can shape your future. If you're tired of the noise and want real, impactful content, you're in the right place. Don't just watch, engage, learn, and grow with us. Make sure to hit that subscribe button and turn on notifications so you never miss out on game-changing insights. The future belongs to those who understand it. Let's dive in. 1. Institutional adoption. Big players are no longer ignoring Bitcoin. Financial giants like BlackRock, Fidelity, and major banks are integrating Bitcoin into their investment strategies. Institutional money brings credibility, liquidity, and massive capital inflows. The approval of Bitcoin ETFs has opened the floodgates for traditional investors. Hedge funds and pension funds are beginning to allocate Bitcoin in their portfolios. Countries are now considering Bitcoin as part of their national reserves. With billions of dollars pouring in, Bitcoin's price is set to surge. The days of Bitcoin being a fringe asset are over. Institutions drive long-term demand, creating price stability and growth. As more financial firms join the Bitcoin wave, its value could skyrocket to $200,000. 2. Scarcity and halving effect. Bitcoin has a fixed supply of 21 million coins, making it one of the rarest assets in the world. Every 4 years, the Bitcoin halving event cuts mining rewards in half, reducing the rate at which new coins enter circulation. Historically, each halving has triggered a massive price rally within the next 12 to 18 months. With fewer Bitcoins being mined, demand outstrips supply, pushing prices up. The next halving is set to take place soon, and investors are already anticipating the next bull run. Unlike fiat currencies that can be printed infinitely, Bitcoin's supply is mathematically limited. This built-in scarcity makes Bitcoin a hedge against inflation. As adoption grows, the remaining Bitcoins become even more valuable. By 2025, the impact of the next halving could send Bitcoin soaring past $200,000. 3. Global economic uncertainty. Inflation is eroding the value of traditional currencies, pushing people towards Bitcoin as a safe haven. Governments are printing trillions of dollars, devaluing fiat money, and increasing the demand for scarce assets like Bitcoin. Economic crises, bank failures, and currency devaluations are driving people to decentralized alternatives. Bitcoin offers a hedge against financial instability, similar to gold but with greater accessibility. Countries with weak economies, like Argentina and Turkey, are seeing record Bitcoin adoption. People want a currency that governments can't manipulate or inflate away. With growing distrust in central banks, Bitcoin stands as the ultimate financial escape. If global uncertainty continues, Bitcoin demand will skyrocket. A world in financial turmoil could be the perfect catalyst for Bitcoin, reaching $200,000. 4. Mass adoption and retail FOMO. Bitcoin is going mainstream, with millions of new users joining the crypto space every year. Payment giants like PayPal, Visa, and MasterCard are integrating Bitcoin into their networks. Retail investors are buying Bitcoin at unprecedented rates, fueled by fear of missing out FOMO. Apps like Cash App and Robinhood make it easier than ever for the average person to buy Bitcoin. More businesses are accepting Bitcoin as payment, increasing its utility and demand. As Bitcoin becomes more accessible, its network effect strengthens, driving prices higher. Younger generations see Bitcoin as digital gold, choosing it over traditional assets. The more people who own Bitcoin, the stronger its price momentum becomes. A global adoption wave is building, and it could propel Bitcoin to $200,000 faster than expected. 5. Supply shock from long-term holders. A growing number of Bitcoin investors are holding for the long term, reducing the available supply. On-chain data shows that a large percentage of Bitcoin has not moved in years. Whales and institutions are accumulating Bitcoin, removing it from circulation. As demand rises, the available supply shrinks, creating a supply shock. When supply gets tight, small price movements can trigger massive surges. Historically, supply shortages have led to explosive Bitcoin rallies. The fewer Bitcoins available for sale, the higher the price must go to meet demand. If long-term holders continue to dominate the market, Bitcoin could easily surpass $200,000. 6. The power of network effects. Bitcoin's network grows stronger as more people adopt and use it. Every new investor, company, and country that joins the Bitcoin ecosystem adds value. Just like the internet, Bitcoin's value increases as adoption spreads globally. The more developers, businesses, and institutions that support Bitcoin, the more resilient it becomes. Metcalfe's law suggests that Bitcoin's price will rise exponentially with growing users. The more integrated Bitcoin becomes in daily life, the harder it is to stop its momentum. Countries legalizing Bitcoin as legal tender could accelerate this effect. If Bitcoin's network keeps expanding at this pace, $200,000 is inevitable. 7. Institutional FOMO and Bitcoin ETFs. Spot Bitcoin ETFs have changed the game, allowing trillions in institutional capital to flow into Bitcoin. With regulatory clarity improving, more institutions are ready to enter the market. Bitcoin ETFs remove barriers for traditional investors, making Bitcoin easy to buy and hold. As ETF adoption grows, so does demand, reducing available supply. Historically, every major financial innovation in Bitcoin leads to a massive bull run. Once pension funds and sovereign wealth funds start buying Bitcoin, the price will skyrocket. The approval of Bitcoin ETFs could be the biggest catalyst for Bitcoin, reaching $200,000. 8. The weakening of traditional finance. Trust in traditional financial institutions is declining rapidly. Bank collapses and economic crises are pushing people towards alternative financial systems. Bitcoin operates outside government control, making it an attractive option for wealth preservation. Unlike traditional banks, Bitcoin is open 24/7, borderless, and censorship-resistant. More people are choosing decentralized finance over legacy banking systems. As the flaws of traditional finance become more apparent, Bitcoin demand will soar. 9. Government and corporate adoption. More governments and corporations are adding Bitcoin to their balance sheets. Countries like El Salvador have already made Bitcoin legal tender. Companies like Tesla and MicroStrategy hold billions in Bitcoin as a treasury asset. As more nations and companies follow suit, Bitcoin's legitimacy and demand will skyrocket. Bitcoin becoming part of national reserves could push its price past $200,000. 10. Bitcoin as the ultimate hedge against inflation. With central banks printing money endlessly, inflation is eroding purchasing power. Bitcoin offers a fixed supply, making it a superior store of value compared to fiat. As inflation rises, more people will seek protection in Bitcoin. Historically, when inflation surges, so does Bitcoin's price. Investors are realizing that Bitcoin is digital gold, and its price will reflect that. That's it for today. If you found this breakdown valuable, don't forget to smash that like button and share your thoughts in the comments. Bitcoin's road to $200,000 is full of opportunities, and we'll be here to cover every major move. So make sure you're subscribed. Turn on notifications so you never miss out on our next deep dive into crypto, finance, and the future of money. Stay informed, stay ahead, and most importantly, stay ready for the next big wave.